Hey everyone, Fat Peter here again. My brother Sydney Peter is still buried in work, so I'm holding down the fort. Today's episode is for all the coders out there. You might be sitting at home writing Python while the tax office quietly counts your money. Let me introduce you to Kevin. Kevin is 32, a software engineer at a Sydney tech company. He makes 120 grand a year, hybrid setup, 3 days at home, 2 in the office. He's not a finance wizard, but this year he legally saved about $4,000. First up, working from home is a gold mine, but it's also a minefield. The ATO gives you 2 ways to claim home office expenses. Method 1, the fixed rate method. You claim 67 cents for every hour you work from home. That covers electricity, internet, phone, stationery. You don't need to split up individual bills, but there's a hard requirement. You must keep a daily record of your actual hours worked. No guessing from memory in July. Method 2, the actual cost method. You calculate each expense separately, electricity by room proportion, internet by usage percentage, office furniture by depreciation. You need to keep all your bills, plus maintain a 4-week representative usage log to support your work use percentages. More work, but usually more money bath. 3, 8 days a week did the maum, 8 days a week to at home, 8 hours a day, 8 hours a year. Fixed rate method, 1,200 hours times 67 cents, that's $804. But the actual cost method, internet at $90 a month, 80% work use, that's about $864 a year. Electricity at 15% of the house, annual bill $3,600, deduct about $540. Desk and chair depreciation about $300, total $17,400. That's $900 more than the fixed rate. Kevin went with actual cost, obviously. Now here's where most people mess up. Pay attention. If you use the fixed rate method, your phone and internet are already included in that 67 cents. You cannot claim again separately. But Kevin chose actual cost, so he can claim his phone separately. His work use is about 60%, annual phone bill of $1,440, that's $864 deductible. That's real money. If you use fixed rate and still try to claim your phone, the ATO will spot the double dipping. It's the #1 trigger for an audit. Next up, professional expenses. Coders, this is where you've been leaving money on the table. #1, tech subscriptions. GitHub, Aussie services, technical documentation, about $800 a year. All directly work-related, all fully deductible. #2, self-education. Kevin got his cloud architect certification this year. Course fee $1,800, exam fee $300, that's $2,100. Directly related to his job, fully deductible if you're a developer. Certifications are a tax goldmine. #3, professional books and journals, about $300 deductible. #4, work equipment. He bought noise-canceling headphones specifically for work, $350. Because they're over the $3 threshold, he can't claim them all at once. They need to be depreciated over their useful life. Year 1 deduction is about $116. It adds up. All deductions combined roughly $6,000. Kevin's taxable income drops from 120 grand to about 114,000. Tax saved about 2,200. Refund about 1,800. Total 4 grand back in his pocket. 3 mistakes Kevin wants you to avoid. He learned these the hard way. 1, don't mix the fixed rate method with separate phone and internet claims. That's double dipping and the ATO will catch it instantly. 2, your home office records must be kept daily. You cannot sit down in July and reconstruct 3 months of work hours from your calendar. If the ATO audits you and can't find proper records, your entire home office deduction gets denied. Log it on the 3, the hours you claim must be actual hours worked for your employer. Not hours spent sitting in front of your computer watching YouTube while telling yourself you're thinking about system architecture. Doesn't count. Quick recap, 2 methods for home office. Fixed rate is simple but gives less. Actual cost is more work but usually worth it. The rate is 67 cents per hour, not 70. If you use fixed rate, do not directly claim your phone or internet. IT engineers, your biggest deduction is self-education. Certifications are fully deductible. Records daily, retroactively. In that episode, the thing Chinese small business owners dread most, BAS statements. Where does the GST you collected actually go? So many people get fined on their first BAS because nobody told them this one thing. I'm Peter, still running the show for my brother. Like, subscribe, and see you next time.